Welcome to Week Gen C.
Focused on young adults in the Northwest
And their careers in a post-pandemic world.
we chat to local experts, finding out what you can do to get yourself in the right headspace to kickstart that career.
Hi Mary, how are you?
Grand, thank you.
Today I am going to be asking you some questions about your career. So you work for the credit union, I believe.
That's correct, yes.
And what exactly does the credit union do?
Well, the credit union does quite a lot of things that are very different from what a bank does. While we offer some of the same services and products that a bank does, what we do is we really help people to manage their money and to take control of their money themselves. So we offer savings products, loan products, insurance products, but we also support the community. We do this by hiring local people, by offering a donations and sponsorship committee, whereby we look at applications from worthy groups and individuals for donations and sponsorship, and we promote local businesses. We also participate in activities like this, where we try to educate people, local people, in how to manage their money and take control of their finances.
Okay, and what makes it different to a bank?
Well, there are loads of differences between ourselves and a bank. People often think that they call us a community bank, and in a sense we are. But some of the things that we do, first of all, is the emphasis is on local. Every credit union is independent and it's local. So it serves the people right within its local area. So each credit union has its own board of directors. They set their own limits on savings and loans and things like that. So we're not branches of a big multinational bank or an international one like HSBC. We are independent and we're local. We're also a cooperative. So we are owned, run, and managed by and for our members. Our members are, our account holders are members, they're not customers. And they own the credit union and they know that they do. So when you might go into a bank and you have to wait for 10 or 15 minutes to get served, but you sort of expect it. But when our members come into the credit union, they expect to be served right away and to have the highest level of service. We're member owned, a bank is not. The customers don't own the bank, but our members of a credit union do own the credit union. We're not for profit. What that means is at the end of the year, any surplus that we have after we have paid all our bills, we give back to our members as a dividend or an interest rebate. Members elect the directors who assume responsibility for the credit union on their behalf. And our directors are volunteers. They aren't paid. They volunteer their time. And the reason why the credit union does this, it isn't because we're cheap. It's because we want the focus to be maintained on our members, not on the maximizing of profits. Whereas other organizations like a bank, their directors might get bonuses if they have an especially good year. If we have an especially good year, all our members get a bonus in the form of a dividend or an interest rebate. And of course, our members can put themselves forward for directors. So we have a lot of big differences between a credit union and a bank.
Mm-hmm. And how and why should someone join the credit union? I mean, you've just given me 1,000 reasons I know I would want to join, but can you tell us why specifically the credit union?
Well, I'll start with you as a student. Yeah. It's probable that you haven't yet really established much of a credit rating. You haven't hopefully you haven't had a whole lot of loans or credit cards or things like that. So it can be very difficult to sort of get yourself on that rung of borrowing, but borrowing hopefully sensibly. So what a credit union does is it looks at your character as the main form of collateral. And we consider your character to be your savings record. And if you have loans with us, then your borrowing record. So one of the things why it's important for a young person to join a credit union is to establish that character, to establish a savings record, even if it's just £1 a week, or if you can afford 50 a month, whatever you can afford, do it regularly. Then when it comes time for you to take out a loan with us, then we will look at that record and say, well, she saved regularly. Chances are if we lend her money, she'll pay that back regularly. The other thing is, we offer really good value competitive loans. We have 4 different loan products. They're they're priced very, very competitively. So if you go out and shop around, you'll see that a credit union loan is pretty good value. We also offer insurance products at no direct cost to our members. So your savings are insured and your loans, if they're eligible, are insured. And then finally, for a lot of our members, we are the safety net. They might have car finance with a finance company. They might have a mortgage with a bank. They might have some other bank, and they've maxed themselves out. And when something goes wrong, where else do they go? Well, the credit union is always there to help out if we can, of course. And so it's very, very good to have your credit union, a good account with your credit union, because we will listen to you, we'll work with you. And when times are tight and tough and uncertain, we'll try to help you to get through them. And the other thing is your credit union loan can help you to establish a credit score, and a good credit score. So when you are shopping around for credit elsewhere, you can build that credit score up. So those are some of the reasons maybe why you would like to join the credit union. And plus, we're very friendly staff and we give a good service when you come into the building, or we also offer full online services now. So those are some reasons.
Just swoop in and save you like a superhero. You need it. What are the best things you could do to start budgeting and managing your money properly? Could you give us some advice?
I would say, first of all, if you think about it, it all comes down to choices that you make. It's more important the choices you make than even the amount of money you have. And that might sound kind of funny, but think of all the celebrities that you can think of who have billions of pounds maybe, and they end up bankrupt and broke and in court. I think of probably the highest example one would be Michael Jackson. He owned that Beatles copyrights of all their songs, for heaven's sake. He was made of money and he died really broke. So it has to do with the choices you make. There are plenty of people who are on medium incomes or low incomes who end up buying their own cars, buying their own houses, a nice sensible holiday once a year. So you need to take responsibility for your money. Be responsible about it, make responsible choices, and learn about money. That's very, very important. Learn about what your credit score is. Learn what APR means, what variable APR means, what representative APR means. APR is your annual percentage rate, the cost it is to borrow money from a borrower. The lower the APR, the cheaper the loan. So get all of that knowledge. It's your responsibility. It's nobody else's. You wouldn't let somebody else go out and pick a pair of shoes for you. Why would you let somebody else go out and find your loan for you? You need to do that stuff. Then keep a record of your expenses. We all know that there are loads of things that people can cut down on. Takeaway coffees, you're once or twice a week to Guapo or to Subway or something like that. You don't really need to do those things. If money's tight, then cut back on those, or look at ways that you can increase your money. The other thing is, the last thing I'll say is, there's loads of budgeting tools out there. There's apps that you can get. We have a good interactive budgeting tool on our website. Download that. Be honest with what you spend your money on, and look at ways that you can cut back and ways that you can build up your income as well.
Mm-hmm. And why is it important to get into the habit of saving regularly?
Well, like I just said before, the credit union in particular, we will look at a member's saving record when we consider lending them money. So if they have established even just 3 or 6 months of saving regularly, and they come in to apply for a moderate loan, that's a good sign to us. That tells us that that person knows how to handle their money, and they're reliable, and they'll come back and they'll pay their loan like they agreed to do. The other thing is, it's very, very important to establish a rainy day pot of money. There's nothing like the confidence £500 in the bank, or the credit union even, can give you if you hit an emergency of some kind. Then you don't have to resort to asking somebody else to borrow the money from them, or to go to a credit card or something like that. Even £500 or £1,000 sitting there waiting for you, just waiting for an emergency, is a great thing to have. And the other thing is, to establish regular savings, it's a good way to do it would be, like for the credit union, what we can do is you can set up a direct debit. So when you get in, say if you're working and you get paid weekly or you get paid monthly, set up a direct debit with us where you get £25 is put automatically into your savings. Then you don't even miss it. If it's not put in your hand or in your current account, you'll never even miss it. It just automatically goes into credit union, and you'd be surprised at how it builds up.
Yeah. And as a student, I just want to know, there are many students that get into lots of uni debt. What advice would you give to someone who's just about to start uni and to stop the debt happening?
Right. There's a couple of things that you can do. First of all, read all the paperwork with your student loan and your maintenance grant and all those things if you are going that way. And most students do have to do that. I have 3 kids who have gone through it that way. So learn about it, find out which you have to pay back and which is just a grant and it's yours. The other thing is, remember that your university fees get taken out right away, but you have to manage the maintenance grant and the other grant that helps to meet, or the other loan that helps to meet your living expenses. You're going to have to just budget. You know, if you can set aside a separate bank account or something for your rent, if you're living away from home, then put your 3 months rent into that one, and then just have your direct debit come out of that for your rent payments, so that you don't have to touch that. You don't dip into it for nights out or something like that. Again, take responsibility for finances, learn about money. This is your chance to do it. It might surprise you to learn that most people think more about their hair each day than they do their money and their finances, and which is more important. You know, check your bank balance every morning. Every bank has an app now. The credit union has an app. You can check, see where your money stands every single day. Try to avoid overdrafts. All right. Banks will offer overdrafts. They're very tempting. If you have to go into an overdraft, pick a small one. The worst thing probably you can have is a £2,000 overdraft, because when you get your next student loan payment in, most of that's going to go to clear your overdraft. And it's very disheartening when that happens. The other thing I'd say is try and stay away from the credit cards. Banks will give you, there will be bank account drives and everything at open days, freshers weeks and everything. I'm not disrespecting the banks, believe me, but they will be sort of handing out credit cards and encouraging you to apply for them. Try to stay away from them. Credit cards are good for things like holiday, believe it or not, high value goods, because when you charge the good on that credit card, if something happens, if the company fails or goes under, then the credit card company will reimburse you that money. So that's one good way to use a credit card. The other thing is, use a credit card if you can pay it all off in one go. That's very good. All right, then you don't owe any interest. The problem is when you get something like a £1,200 limit, and you spend 300 one month, and the next, and you pay the minimum off, and then you go and you spend another 500, and before you know it, you've reached that maximum, and that's a bad place to be. So try and avoid that. Try to avoid overdrafts and credit cards if you can. And then the other thing is, again, if you have to take out a loan, learn about that APR. It's key. All right, you have to know the difference between a high APR and a low APR. Remember, low APRs are better. They're cheaper. And learn what's good debt and bad debt. Good debt is a mortgage, your education, things that are going to enhance your life in the future and pay, increase in value. Bad debt is when you use a credit card for a nightclub or for clothes or for entertainment. Then what you have to think is, if I can't pay cash for it, I don't have it in my current account, then I can't afford it and I'll have to do without it. It's hard to do when your friends are all going out, but that's what you have to learn to do, I'm afraid. Then finally, build a good credit score. A credit score is something that there are different companies that maintain these scores. Experian is one of the most popular ones. What that does is it looks at your pattern of repaying debt. So it doesn't look at the amount you have. It just looks, have you made every payment that you agreed to make? Have you been late on payments or anything like that? A good credit score means that you can access cheaper debt in the future. So you get a better mortgage rate, you get a better car loan, you get better things like that. The things that'll hurt your credit score are missed payments, late payments, especially watch your mobile phone bills. You want to make sure that they're paid on time. Making multiple applications for credit, that's a bad sign to, that means that you might be desperate for it. And one of the big ones, and we see this here at the credit union for young people in particular, is online gambling. That will hurt your credit score big time, because it indicates really to a lender that you might have a money problem, a gambling problem. So that will really, really hurt your credit score. If you want to get cheap credit in the future, watch that. So you want to establish a good credit score. And what lenders use the credit score for is it indicates to them whether you're going to be a good risk at lending money to. So if you have a good high credit score, then say the credit union will say, well, they're a good risk. We'll go ahead and we'll give them the loan. But if they have a bad credit score, the credit union and banks will say, no, or they'll give you a higher, more expensive product.
Yeah. Something that's just sprung to mind is, you see, if you were to say use your credit card for things like clothes and you paid it back on time,
Yes.
would there still be negative side effects to that? Because
Yeah.
I see that as building your credit.
No, yes. In fact, that's a very, very good point, Dervla, because one of the good ways to establish a good credit score is to use a credit card or store card once or twice.
Okay.
All right. Use it, pay it off, and then go and put it away somewhere. Don't use it again, because they're very, very high APRs on credit cards and store cards in particular. The average APR, I think, for cards is something we're around 30% APR. Now you compare that with our highest price loan at the credit union is 12.68%, and our lowest is 6%. So you can see that a loan from us is far cheaper than using a credit card or a store card. But the real danger is using doorstep lenders. There's a couple of big companies around that will do that, or those private credit card companies. If you see the ads on TV and read the fine print, you'll see that their APR is sometimes 200 and 300 and 400%. Now you compare that to, a credit union loan, or even just a regular store card at 30%. So you made a very good point. Using those store cards and credit cards once or twice, paying them off as you agree, or try and get them paid off in one go, then put them away. Keep them in reserve just for when you want to book that big holiday, whenever we're allowed to do it again, or to buy, something really, big, like a big widescreen TV or something like that. But again, only use it if you can pay it off quickly. Okay.
Fair
So
enough.
that's a good way of establishing a good credit score. The worst way, though, is if you miss one of those payments.
Yes, you have to be careful.
Definitely.
Okay, well, a lot of my friends and people my age, they're trying to live their best lives and they're spending away, and sometimes they're skint, but I think having a credit union will be a very good safety net for them. So
Oh,
yeah.
it definitely is. And it's a great way. You learn how to manage money too. There's a lot of things that you can participate in a credit union with. We're always looking for young people to give us feedback, ideas. Sometimes we're looking to organize focus groups. What do people your age need from a credit union? What do we need to give you in terms of products and services that maybe we're not doing? What do we need to do to make your generation more aware of how a credit union is your bank? It's your way, it's something that you can run and help participate and put your name forward for election. All those things that a bank can't offer you.
Yeah.
Thank
you very much. That was all really helpful information. It was lovely to meet you, Mary.
Lovely to meet you too, Dervla, and best luck to everybody. Okay.
Thank you very much.
All
Bye.
right. Thank you. Bye.